Investing is something that should be left alone and only assessed after years and years of continuous returns. As every human being, I'm super curious about my investments, what is happening with my portfolio and how it's doing and all that. That's why I keep checking on it every single day and night, because I want to analyze my stock choices that I made in the past. In this video, I'm going to share the best and the worst stocks and ETFs I have in my current portfolio and what I plan to do with them next. And I want to start with the worst performing stocks in my portfolio. Most of these stocks are going to be from some speculative high-risk investments, because speculative stocks tend to fluctuate a lot, especially over the short-term period. In your investments life, there's going to be some green and red days, of course, and I want to be transparent with everything I have in my portfolio, and if there is something that is in red, that's totally fine. And if something that performs really good, I want to share that too, so we can learn from each other. First of all, share price appreciation is great, but when you are analyzing your investment portfolio, you need to consider the weight of this stock so you can see the full picture. However, today I'm going to be looking at individual stocks and individual performance of this stock. So the weight does not matter. And the worst performing stock I have in my portfolio today is going to be Gevo. The ticker symbol is GEVO. So this one is traded on Nasdaq. And over the last 9 months, it actually lost around 53% of its value. And what this company is doing, they're making sustainable low carbon biofuel and chemicals. So they're sort of in this innovative space where they want to change how the fuel works in our society, in our world. They're basically working on the next generation of renewable gasoline, jet fuel, and diesel fuel, with the potential to achieve zero carbon emissions. This is pretty crazy if they're gonna achieve this. That's why I'm pretty bullish on this company over a long-term period. But over the last 9 months, they actually lost some value, which is fine. And I'm not very concerned about this stock within my portfolio right now, because it has around 0.16% allocation of my portfolio. I'm gonna keep holding this company for the next 5 to 7 years to see where they're actually gonna go. And probably if they're gonna dip even more, I'm probably gonna invest more into it. The next one on the list is gonna be Skills. The ticker symbol is SKLZ and trade on New York Stock Exchange. And Skills in the mobile games platform. And overall, video gaming is experiencing a tremendous growth right now lately, and Skills is actually on the right track to achieve that too. And my plan right now to hold them at least for the next 2 years and see what's gonna happen. So far, over the last around 6 to 7 months, this company actually lost around 52% of its value. But if you're only having a little portion of your portfolio allocated to this, you shouldn't be worried about that. The next one on the list is going to be Naked Group Limited. The ticker symbol is NAKD and they're traded on Nasdaq. This company is actually into e-commerce. They're selling underwear and swimwear, and that's pretty much it, but they're doing it in a very nice way. So I think the company is going to actually perform really good going into the future. And if they're going to go at least to the same price point where I actually bought them, then I'm going to liquidate. Currently, over the last 6 months, I lost around 38% on this stock, which is totally fine. I'm okay losing it all. I only have around 0.17% allocated to my entire portfolio. The next two companies, actually, I'm super bullish on them going long term. I'm going to hold them at least for the next 10 years. It's Palantir and Coinbase. So with Palantir, the company is doing some data analysis and trying to perform this, huge data aggregation algorithms and tell them what's happened with their data. Currently, Palantir is down around 31% over the last 5 months. Big dip, right? For a company like this. They actually went public only last fall. So they've been in the market only for a year now. And they started trading at around $10. And right now they're around $22. So they still gained quite a bit since their IPO. And I think they're gonna go beyond that. My prediction for this stock, they're gonna be around 100, 150 in the next 5 years or so. So I'm gonna keep holding them for the next 5 years at least and see what's gonna happen with them. With Coinbase, I invested in this company on their IPO date, which was not the best decision on my side. It actually lost quite a bit of value since then, around 30%. But again, for this stock, I'm actually bullish for long term, because the cryptocurrency just started around 10 years ago and we're sort of still in this early age and moving on to the next stage of this digital monetization system. Right now, Coinbase is actually one of the largest cryptocurrency brokerages and is the largest cryptocurrency exchange in US right now by volume. And they're adding a lot of people into that platform. And I think if they first gonna reduce or lower their fees and also add the cold wallet storages to their platform, they're gonna just skyrocket to the moon even before the 5-year mark. I'm bullish on this. I'm gonna keep holding. Should you start investing in this company? It's totally up to you. And the final worst performing stock in my portfolio is gonna be actually ARK ETFs. We actually lost around 8% of the ARK ETFs since the beginning of the year, which is pretty crazy considering that last year these ETFs actually gained around 100%. The holdings of this ETF are actually very legit. They're companies who are innovative. I believe they're gonna actually do even better going forward. Right now we're still in this stagnation period where nothing's gonna happen. Nobody's gaining, nobody's losing. So at some point this market is gonna be broken. Nobody's gonna go into the bull market for 10 years. All the stocks that actually perform really bad in my portfolio are all speculative stocks or stocks that are very high risk and high return. So right now they're not returning very high. I'm totally fine with it as long as I have something else in my portfolio that can sustain the performance and give me the sustainable returns, regular returns over time. I'm talking about my dividend stocks, which are blue chip stocks, dividend aristocrat stocks, or dividend ETFs, giving me the most amount of value in my portfolio right now. Let's take a look at the best performing stock or ETF in my portfolio. And the lowest performing stock, which still gained a little bit of value since I bought them, it's Hydro One. I gained around 5% since I've invested in this company, and they're also giving me around 3.4% in dividends, which is great. I'm getting regular returns on this stock besides the price appreciation part. The next one is Talos. I invested in this company around 7 months ago, and since then I gained around 5% on this stock, but they're also giving me dividends around 4.5% in dividend yield every single quarter. And I keep adding this company more and more. I think Talos actually lined up for a very good performance over the next 5 years. Moving on to the ETFs, SPHD. This is my largest investment in my portfolio at around 8% of my entire portfolio. And they actually performed really nicely since I invested in them around 9 or 10 months ago. 25% of just share price appreciation. They also give me dividends, pay me dividends every single month, and I keep reinvesting all these dividends back to the stock. So it's growing on its own without any sort of effort on my side. And such ETFs also great for diversification of your portfolio where you can be exposed to a lot of stocks at the same time. The next one is Capital Power Corporation. The ticker symbol is CPX.TO, and it is a utility stock with a great dividend yield of 4.9%. They also brought me quite some returns since I invested in them around 6 months ago, and around 26% since then, which is great for a company that actually a dividend payer. They're not a growth stock. So I really like this company and I'm adding to it more because I see they perform really good. Now moving on into financial sector, the first one is TD Bank. The ticker symbol is TD.TO. This is one of the biggest banks in Canada. I invested in them right when I started doing the dividend investing part of my portfolio around 9 months ago. And this stock brought me around 28% only share price appreciation, which is pretty great. And it has a pretty good allocation in my portfolio, around 6%. So I like this company. They pay dividends every single quarter and I reinvest their dividends back to them every single quarter automatically. Moving on to the next one, which is going to be Power Corp. The ticker symbol is POW.TO. This one is pretty interesting. I have around 2.3% allocated to this stock in my portfolio, and since I invested in them, I gained quite a bit, around 29%. But hear me out here. This company right now is in almost all-time highs. The last time their share price was at this point was in 2007, 14 years ago. I think they still gonna gain some momentum and maybe level out a little bit at that point because the company has quite good projects right now. They keep innovating their business and keep reinvesting back in their business quite a chunk of money. So I'm gonna keep holding this stock. I didn't expect them to grow that fast since I invested in them. That happened. If they're gonna still perform at the same level, I'm super happy about it. If not, I'm probably gonna liquidate it and move to a growth-oriented stock that has better potential over the long-term period. The next one is going to be bank as well, which is Bank of Nova Scotia. The ticker symbol is BNS.TO. I like this stock a lot, and even though I invested the majority of my holding into Bank of Nova Scotia last year during the market crash, that's why this stock probably gained a lot in my portfolio, around 30%. The company is still lined up very nicely for a long-term period as any other bank. They gave you sustainable return every single year, and they're also pretty safe. They're not gonna fluctuate a lot over this time period. And I have around 5.5% allocated to this stock. So I'm gonna keep holding, I'm gonna keep investing in this company and gain from their dividends every single quarter. Now moving on to two real estate investment trusts, Plaza Retail and Rio Canada. Plaza Retail is actually a pretty good stock. It's a cheap real estate investment trust that you can invest into and get dividends on a monthly basis that you can reinvest. And what I have in my portfolio, I reinvest all the dividends I get from Plaza Retail back to this stock so I can get actually 2 shares of this stock extra every single month. The dividends I'm getting every single month is actually more than the previous months, and I also gained around 30% of share price appreciation over the last 9 months. Real estate is pretty risky, things can happen as in 2009, but they give you sustainable dividends every single month, and they actually grow pretty nicely as well. Ryokan is actually a very nice example here as well, because I invested in this company around 9 months ago when I just started doing dividend investing. At that point, their dividend yield was pretty high, and then they cut their dividends after a couple months, which was unexpected for me, sort of expected because we were in this very crazy market situation, and now I'm just waiting for them to return their dividend amount back. And since I invested in this company, I gained around 33% in share price appreciation. So the company actually rebounded from the last year market crash pretty nicely, but where it's gonna go next, I don't know. That's why I'm waiting for their financials released very soon. The next one is gonna be a dividend ETF, VDY. It's a Canadian high dividend yield index ETF, gained around 33% since I invested in them. Their MER is also on the lower side, around 0.21%, and they also provide you monthly dividend payments, great yield, great return, and low MER. Moving on to the next one, which is the real estate investment trust, VRE. This one actually provided around 37% of share price appreciation since I invested in them. And especially for a dividend paying ETF, their MER is a little high at 0.38%. However, this ETF actually gained me a pretty nice return over the last 9 months, which is pretty good. The next one is going to be Starwood Properties. The ticker symbol is STWD. I'm super happy that I invested in this company back in the days, and they provided me with a 40%, almost 40% return since then, and I think I'm going to be actually increasing my positions into this stock going into the future. The best performing stock in my portfolio is going to be Gladstone Investment Corporation. The ticker symbol is GLAD. This is a monthly dividend payer which provided me with the great returns over the last 9 months, around 60% of share price appreciation. They pay me dividends every single month. I keep reinvesting these dividends every single month, and I'm also increasing my position in this stock every single month. Besides just dividend reinvestments, I actually contribute more into it. Right now the allocation in my portfolio is around 3%. This company is lined up for a great future. The company actually provides with the loans to small businesses, and they collect interest, and the part of that interest actually paid out as dividends to their investors. So overall, all my dividend stocks up from 8 to 50% over the last 9 months. Currently making around $500 in dividends every single month and reinvesting that back to the stock market, and it's gonna grow exponentially going forward. Smash the like, subscribe to my channel, hit the bell, and I'll see you around. Keep investing, start investing, and get your dividends. All the best, cheers, bye.